Have you ever wondered what a company's buyback says about your investment? Imagine a company not just telling you their stock is valuable, but putting their money where their mouth is. That's exactly what happened recently with Palantir. And if you're a current shareholder, or even just someone watching from the sidelines, you'll want to hear this. So let's break this down. Welcome to Stock Hub, your go-to place for the latest stock market news, analysis, and insights. Let's dive in. Palantir recently sat down with top Wall Street analysts to share their latest quarterly performance, and the conversation included a number of big revelations. If you don't have time, or frankly, the patience to dig through the long technical conference call transcript, don't worry. I've got you covered with everything that actually matters. Everything that helps paint a clearer picture of Palantir's current position, and more importantly, its future. Let's begin with one of the most significant updates. Share buybacks. The leadership at Palantir disclosed that they've bought back roughly 2.3 million of their own shares as part of an ongoing share repurchase initiative. What's more, even after this sizable buyback, they still have a whopping $918 million left that's been authorized for future repurchases. Now, why is that important? When a company uses its own capital to repurchase shares, it's not just reducing the number of outstanding shares, it's actually sending a message, a powerful one. Think of it like this. Imagine a business leader telling you, "Our stock is valuable," and then backing up that claim by actually spending money to buy that stock. This act increases earnings per share over time. Fewer shares means the same profits are now divided among a smaller group of shareholders. So in theory, everyone's slice of the pie gets just a little bit bigger. But this also serves as a confidence signal. Management is essentially saying, "We believe in our company so much, we're buying it ourselves." You see, talk is cheap, especially when it comes to CEOs and executives. They'll often say glowing things about their own companies because, well, that's their job. No CEO is going to go on CNBC and say, "Honestly, I think our stock's overpriced. Don't buy it." That's just not going to happen. In all my years of tracking companies and dissecting hundreds of earnings calls, I've never seen a single executive publicly discourage investment in their own company. It just doesn't happen. Instead, most executives are constantly hyping up their firm's future. That's the norm. So when someone says their stock is undervalued, that in itself doesn't mean much, unless they're putting cash behind those words. That's why Palantir's buyback matters. It's not just corporate fluff or a line in a press release. It's real money spent by the company showing genuine belief in the business's current and future value. Now let's talk valuation, because that's where things get interesting. Palantir, despite being a solid business with an impressive track record, is trading at a forward price-to-earnings ratio of 175. That's extremely high. In fact, among the 200-plus companies I follow regularly, Palantir is among the most expensive. And while the business fundamentals are strong, this valuation is what's personally held me back from investing in the stock. I'm not bearish. I don't think it's a bad company, but I'm cautious because of the high price. But that's also why this buyback is worth paying attention to. It slightly helps reduce the pressure that comes from such a steep valuation. It doesn't solve everything, of course, but it does suggest that even Palantir's own management believes the current share price is worth supporting with company funds. And that matters, because actions speak louder than words. Now let's address those of you who already own Palantir stock. First of all, congratulations. If you bought in early, chances are you're sitting on some very healthy gains. But with those gains also come questions. Should you hold? Should you sell and lock in profits? Is the hype around Palantir getting ahead of itself? These are valid concerns. And in moments like this, it's helpful to anchor your decision-making in facts, not emotions. And one of those facts is this. Palantir is showing strong customer retention and growth. The company highlighted that its artificial intelligence platform, AIP, is delivering value that far exceeds what customers are paying for. That's not just marketing fluff. They've backed it up with real data. Specifically, their net revenue retention rate stands at 124%. That's up 400 basis points from the previous quarter. Let me explain what that means in plain terms. It means not only are existing customers sticking around, but they're also spending more money with Palantir over time. In fact, in their second year of using the service, customers are spending even more than they did in their first. That's huge. It shows the product is sticky, it's valued, and it's becoming a bigger part of their clients' tech stacks as time goes on. Think about that for a moment. Palantir isn't just making a sale and walking away. They're building long-term relationships with clients, relationships that deepen over time. That's the kind of business model that suggests sustainability and scalability. And when I evaluate a company, one of the core pillars I look at is its customer value proposition. In simple terms, do customers feel like they're getting a great deal? Because if they do, they'll keep coming back. And clearly, based on this retention data, that's exactly what's happening with Palantir. So now we have a picture forming. On the one hand, we have a company that's confident enough to repurchase its own shares, despite its lofty valuation. On the other hand, we see tangible proof that customers are sticking around and spending more. Combine that with the broader excitement around AI and big data, and you have a compelling, if still risky, investment story. Let me bring this all together. Palantir is a company that's navigating both investor skepticism and market enthusiasm. While valuation remains a hurdle for many, including myself, the latest actions from management are noteworthy. They're not just giving investors lip service, they're using real money to show confidence. Meanwhile, their product is retaining customers at an accelerating rate, which bodes well for long-term growth. So, if you're a Palantir shareholder, ask yourself, what kind of investor do you want to be? Do you want to lock in profits today based on the current valuation? Or do you want to hold through the ups and downs, betting that the company's fundamentals will continue to shine over the long term? There's no wrong answer. It all depends on your personal investing goals. But either way, now you know the facts, and those facts can help you make a smarter, more confident decision. Thanks for watching Stock Hub. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon so you never miss an update. See you in the next one.